Good evening, you're watching AWANI Tonight with me, Faye Kwan. Amid a threat of US reciprocal tariffs creating uncertainty in global trade, Malaysia is prioritizing stronger ties with Europe. Investment Trade and Industry Deputy Minister Liu Chintong highlights that deepening economic relations with Europe is essential for navigating the ongoing global economic challenges.
Liu emphasized the importance of having major European economies, particularly Italy, as close economic allies, while also strengthening ASEAN-EU relations. He added that he would hold a closed-door meeting with Italy's Deputy Minister of Enterprises and Made in Italy, Valentino Valentini, to discuss bilateral cooperation. The European Union, like others, was not spared from President Donald Trump's reciprocal tariffs. The US imposed 25% tariffs on EU cars, steel, and aluminium in March, followed by 20% tariffs on other goods in April. The 20% rate was later halved, giving both sides a 90-day window to negotiate a broader trade agreement. Meanwhile, the EU agreed to suspend its planned countermeasures, 25% tariffs on 21 billion euros worth of US goods, for the same 90-day period to allow space for negotiations.
Malaysia will push for greater engagement between ASEAN and BRICS to enhance regional and economic cooperation, says Dato' Sri Muhammad Hassan. The Foreign Minister says this will be among key agendas at the BRICS Foreign Ministers meeting in Rio de Janeiro, taking place from April 28th to 29th.
During the meeting, Muhammad said Brazil will focus on 6 priority areas, including global health, trade, investment and finance, climate change, artificial intelligence, as well as multilateral peace and security. He noted that these priorities also align with Malaysia's national interests. Muhammad added that the emphasis on trade and investment was timely, given global economic uncertainties following unilateral tariffs by the US. The BRICS Foreign Ministers meeting is a key precursor to the BRICS Leaders Summit on July 6th and 7th under Brazil's chairmanship. Malaysia officially became a BRICS partner on January 1st this year.
China is actively promoting visa-free travel to boost tourism and international exchanges, extending its unilateral visa-free policies to 38 countries just last year. Most recently, the country extended a 5-year visa-free travel agreement with Malaysia, a deal that signals deeper regional cooperation. Datuk Professor Dr. Awang Azman Awang Pawi from University Malaya explains how this strategy stands to benefit China on a much broader scale.
China tourism sector is bouncing back from COVID-19. In 2024, it saw an impressive 48.8% jump in foreign visitors, rising to 82 million, up from 55 million the year before. Over half of those visitors came thanks to visa-free or simplified entry policies. China is a transit hub. Cities like Beijing, Shanghai, Guangzhou, and Chengdu want to be a major global transit stop. Now, travelers heading to Asia or Europe via Chinese airline can enjoy a short stay in China. That help boost the aviation sector, local tourism, and airport economies. Other countries watching this move by China, they are watching closely. By early 2025, China offered visa-free entry to 38 countries, including Germany, France, Malaysia, Singapore, and Thailand. The countries in ASEAN like Indonesia and Vietnam are exploring similar ideas, especially to attract travelers from China and the West. Visa-free travelers typically spend 30% to 40% more per trip compared to visa-bound travelers. Actually, there is a huge for local economies. So, many countries see visa-free access as a fast track to boosting tourism and the trade.
Now, amid trade tensions, Datuk Professor Dr. Awan Asman says China's visa-free push is also seen as part of a broader strategy to expand its global influence. It ties into China's larger ambitions under the Belt and Road Initiative, supporting cross-border trade, digitalization, and stronger economic ties worldwide.
Is this part of bigger strategy by China to grow its global influence? I believe this, yes. This is just one piece of much bigger puzzle. Under the Belt and Road Initiative, easier travel help with cross-border collaboration, infrastructure checks, and academic exchanges. To the digital Silk Road, I believe that China linked this travel policy with initiative in digital trade, AI cooperation, and cross-border e-commerce. So, this visa policy, very smart soft diplomacy. It's about building trust, growing interdependence, and positioning China as a good connector in travel, trade, and technology.
We'll be back with more after the break. Stay tuned.
Menggaruk kulit kepala disebabkan kelumumur, masalahnya lebih mendalam. Gunalah Head and Shoulders menembusi 5 lapisan untuk membasmi kelumumur dan kegatalan. Bebas kelumumur sehingga 100%. Head and Shoulders diuji secara dermatologi.
Wow, excited ya!
Permulanya di sini.
Kita nakkan quality wise yang layak terpilih.
Lagi banyak driver, lagi clarity tu lebih lah.
Borhan, mungkin macam Borhan.
Ikuti kisah perjalanan mereka ke pentas Big Stage Alpha di Astro Riyadh dan Astro Go.
China has pledged to achieve its economic growth target of around 5% for 2025, despite its ongoing trade war with the US. The National Development and Reform Commission, or NDRC, China's state planner, announces plans to roll out new policies in the second quarter to respond to current economic conditions. Zhao Chen-sin, deputy head of the NDRC, said the government would introduce a series of measures to shore up the employment market. These included encouraging companies to maintain stable hiring, expanding vocational training schemes, and boosting employment through public works programs. Zhao added that Beijing was stepping up efforts to implement previously announced policies, such as a scheme to boost consumption and the establishment of a venture capital guidance fund, likely to take effect over the next few months. The People's Bank of China also announced further cuts to interest rates and adjustments to the reserve requirements for commercial banks, while reaffirming its commitment to maintaining a stable yuan. The International Monetary Fund and Investment Bank, Goldman Sachs, recently lowered their economic growth forecast for China over 2025 and into 2026, citing the impact of Donald Trump's tariffs. In a research report published over the weekend, Goldman Sachs warned that tariffs on Chinese imports could put as many as 16 million jobs at risk in China. Meanwhile, China has rejected claims from US President Donald Trump that he received a phone call from Chinese leader Xi Jinping. Beijing's foreign ministry says the two heads of state have not been in contact and that both countries have yet to engage in consultations regarding tariff issues. In an interview last week with Time magazine, Trump claimed his administration was talking to China to reach a tariff deal and that Xi had called him. However, US Treasury Scott Bessent said talks have yet to start. Beijing also continues to deny any such conversation took place, adding that if the US wishes to resolve the issue through dialogue, it must stop threatening and blackmailing China. Since Trump took office in January, both countries have imposed tariffs of over 100% on each other's goods. China has exempted some US imports from its 125% tariffs and, as of last Friday, is asking companies to identify critical goods. In other news, Japan and Vietnam have agreed to boost bilateral trade and uphold global rules of the free flow of goods. This follows a meeting between Japanese Prime Minister Shigeru Ishiba and Vietnamese Prime Minister Pham Minh Chinh, as both countries continue talks with Washington to avoid the impact of new tariffs. The two leaders signed 4 cooperation agreements which involved boosting trade in energy transition products and collaborating on semiconductor research and development. Vietnam is a major assembly hub for Japanese manufacturers, including Honda, Canon and Panasonic, with total investments amounting to $78 billion by Japanese companies, according to Vietnam's finance ministry. Earlier this month, the White House announced bilateral tariffs of 46% on Vietnam and 24% on Japan, though these duties have been temporarily paused until July. Ishiba's first trip to Vietnam and his visit to the Philippines tomorrow mark the latest high-level East Asian meetings amid escalating global uncertainty triggered by US tariffs. Japan was also urged to increase investment in Vietnamese infrastructure projects. The country has been involved in preliminary studies for a proposed $67 billion high-speed railway connecting Hanoi to the southern business hub of Ho Chi Minh, Vietnam's most ambitious infrastructure project to date. However, railway cooperation was not explicitly mentioned in the latest agreements, and Vietnam has said it planned to finance the project largely on its own. South Korea says it is unlikely to finalize a trade deal with the US before its presidential election on June 3rd. Vice Minister of Trade, Industry and Energy Park Sun-taek said it is theoretically impossible for the two countries to agree on a comprehensive trade package by late May or early June.
Both countries agreed last week to craft a trade package aimed at removing new US tariffs before the pause on reciprocal tariffs ends on July 8th. Seoul has requested exemptions from tariffs on autos, steel and other goods and has offered cooperation in shipbuilding, energy and reducing trade imbalances. According to Park, South Korea is also considering sending a delegation to Alaska to review a $44 billion liquefied natural gas project, which the US hopes to fund with investment from partners like South Korea and Japan. He said Seoul planned to form 6 working groups with the US focused on tariff and non-tariff exemptions, economic security, and investment cooperation, with meetings set to start next week. South Korea will hold a snap election on June 3rd after former President Yoon Suk-yeol was ousted for his role in briefly imposing martial law in December. Meanwhile, the US is racing to conclude trade deals with key partners like Japan, South Korea, and India ahead of the July 8th deadline.
For the first time in 2 months, Chinese AI service DeepSeek is available again on South Korean app markets. Downloads of the app were initially suspended after authorities cited breaches of data protection rules. According to South Korea's Personal Information Protection Commission, DeepSeek had transferred user data and prompts without permission when the service first launched in the country in January. The Commission said DeepSeek was allowed to resume downloads after at least partially implementing its recommendations. In a revised privacy policy note applied to the app, DeepSeek now notifies users that it processes all personal information in compliance with South Korea's Personal Information Protection Act. The company added that users have the option to refuse the transfer of their personal information to several companies in the US and China. That report wraps up AWANI Tonight. Check out our web portal, keeping you informed on the critical events shaping our world. All in one place at international.astroawani.com. That's all for now. I'm Faye Kwan. Thank you for watching and good night.